If you're thinking about living in Thailand long term, especially for retirement, there are two areas that can quietly catch people out. Not at the start, but a few years in: healthcare and visas. And the reason these matter isn't obvious at first, because in the beginning, everything feels easy. The lifestyle works, the costs feel manageable, and most people assume they've got it figured out until something changes. It might be a health, it might be an insurance renewal, it might be a visa requirement you didn't fully think through. And suddenly, two things that seem simple start to overlap in ways that can make life here either very smooth or unexpectedly stressful. Now, this isn't about fear, and it's not about saying Thailand doesn't work. In fact, for a lot of people, it works extremely well for many years. But the people who stay long term, 10, 15, 20 years, are usually the ones who understood this part early. So in this video, I'm going to walk you through the realities of healthcare and visas in Thailand going into 2026, what's actually changed, what hasn't, and how these two areas connect in a way that most people don't fully see until later. Because once you understand that properly, everything else about living here becomes a lot easier. If you're watching this, you're probably past the holiday phase of Thailand. You're not just thinking about a few weeks in the sun, you're thinking about how this actually works long term. Maybe you've already spent time here, maybe you're planning the move, or maybe you're somewhere in between, trying to figure out how to make it all fit together: your healthcare, your visa, and the lifestyle that still feels comfortable 5, 10, or even 20 years down the line. And that's really who this video is for. People in their 50s, 60s, 70s who aren't just chasing a cheap lifestyle, but want something stable, simple, and sustainable. Because the truth is, Thailand can absolutely give you that. The slower pace, the climate, the day-to-day ease of life. It all works very well for a lot of people. But, and this is where things start to matter, it's not all automatic. The same country that feels relaxed and flexible on the surface can be surprisingly structured when it comes to paperwork. And the private healthcare system that many expats rely on works extremely well, but it's still a business. So the goal here isn't to complicate things, it's to simplify them, to show you how healthcare and visas actually connect in real life. Because once you understand that properly, you avoid most of the problems people run into later. And more importantly, you can settle into life here with a lot more confidence. Most people arrive in Thailand with a very simple picture in their head: good weather, friendly people, lower costs, and a lifestyle that just feels easier than back home. And to be fair, in the beginning, that picture mostly holds up. You can rent somewhere without much hassle, walk into a private hospital and see a doctor the same day, and generally feel like life here has become a bit more straightforward. That's what makes Thailand so appealing in the first place. But after a while, usually 6 months, maybe a year, you start to notice the parts that didn't get talked about as much. Not the big problems, just small things. An insurance renewal that costs more than you expected. A visa extension that suddenly needed an extra document. A rule that seems slightly different from last year, even though no one officially announced anything. Individually, none of this feels like a big deal. But over time, you realize something important. Thailand isn't complicated, but it does have its own rhythm. And that rhythm doesn't always match what people expect coming from the UK, the US, or Europe. The systems here aren't designed around foreign retirees. They work perfectly well, but you have to learn how to move with them. And this is where the real shift happens. The people who do well long term aren't the ones who try to make Thailand behave like home. They're the ones who adjust early, stay organised, and understand how the practical side of life here actually works. Because once you do that, things become very smooth. But if you don't, the friction tends to show up in two places first: healthcare and visas. And that's exactly what we're going to break down next. Let's start with healthcare, because this is usually the one people feel most confident about early on. And for good reason. When you first experience private healthcare in Thailand, it feels excellent. You can walk into a hospital like Bumrungrad or Bangkok Hospital, see a specialist the same day, and everything runs smoothly. Clean facilities, English-speaking staff, very little waiting around. And compared to private care back home, the cost often feels surprisingly reasonable. So it's easy to come away thinking this is sorted. And for a while it is. But healthcare isn't something you judge based on 1 year. It's something that plays out over time. Because as the years go on, two things tend to happen. Your health becomes a bit more unpredictable, and the system around you starts to matter more. Now, Thailand's private hospitals are genuinely world class. That part doesn't change. What does change is the type of care you might need. Routine things, checkups, minor issues, blood tests are still very manageable, often quick, affordable, and straightforward. But once you move into more serious treatment, surgery, ongoing conditions, anything that requires longer care, the costs can increase quickly. And this is where most people start thinking more seriously about insurance. Now, most expats here have some form of private health insurance. It might be with a Thai provider like Pacific Cross or an international company. And when you're in your 50s or early 60s, getting cover is usually quite straightforward. You'll fill in medical history, choose a level of cover, and that's it. You're in the system. But what a lot of people don't fully think through is how that evolves over time. Because insurance isn't a one-time decision. It's something you carry with you year after year. And every year it changes slightly. Premiums go up, sometimes gradually, sometimes more noticeably, and as you get older, those increases tend to accelerate. At the same time, the importance of your medical history grows. If you develop a condition along the way, something fairly common like high blood pressure, diabetes, or a heart issue, that can affect how your policy works going forward. In some cases, new conditions may be excluded. In others, your premiums reflect the added risk. And then there's the age factor. Some providers stop accepting new customers after a certain age. Others place limits on renewals past 75, 80, or 85. So while insurance can feel like a simple solution early on, it becomes more of an ongoing balancing act later. And this is where a lot of long-term expats find themselves reassessing things. Not because anything has gone wrong, but because the situation has quietly changed over time. Which brings us to the question almost everyone asks eventually. Do you rely on health insurance, or do you start thinking about funding healthcare yourself? So this is the point where most people start weighing things up properly. Do you keep paying for insurance, or do you take more control and fund things yourself? And the truth is, both approaches can work. It really depends on your situation and your tolerance for risk. If you go the insurance route, what you're really buying is peace of mind. You're protecting yourself against the big, unpredictable events, the kind of situation that could otherwise take a serious chunk out of your savings. You pay a fixed amount each year, and in return you know that if something major happens, you're covered. That works very well for a lot of people. But over time, the trade-offs become more noticeable. The premiums rise, sometimes quite sharply in later years, and you find yourself paying a significant amount annually, even if you're not using it. And that can feel frustrating. On the other side, you have self-funding. This is where you effectively become your own insurer. Instead of paying premiums, you keep a dedicated pool of money set aside for healthcare. And when something comes up, you pay for it directly. The upside is simplicity. No policies, no exclusion, no renewal concerns. But the trade-off is obvious. You're carrying all the risk yourself. And that's fine until something serious happens. Because a single major diagnosis, something that requires surgery or long-term treatment, can move from manageable to expensive very quickly. So what a lot of long-term expats end up doing is somewhere in the middle. They don't go all in on either. Instead, they keep a more basic insurance plan, something that covers the bigger, inpatient scenarios, and handle the smaller day-to-day things out of pocket. That way the premiums stay more manageable, but they still have protection where it matters most. Now, there's no perfect answer here, but there is a common mistake. And that's assuming Thailand will always feel cheap when it comes to healthcare. For routine things, it often is. But for anything more serious, the numbers can look very different. And that's why this decision, insurance, self-funding, or a mix of both, becomes more important the longer you plan to stay. Because it's not really about this year. It's about how this still works 10 or 15 years from now. And that's what leads us to the next part. What these situations actually look like in real life. So let's make this a bit more real. Because it's one thing to talk about insurance and costs in theory, but it's much easier to understand when you picture how this actually plays out. Let's start with something simple. You wake up one morning, you're not feeling quite right. Maybe it's a sore throat, maybe you want some routine blood work done. You head to a private hospital, walk in, take a seat, and within 10-15 minutes, you're speaking to a doctor. Everything is smooth, efficient, and reassuring. You pay a relatively small amount, maybe 1,000 or so baht, and you're on your way. That experience is what most people remember. And it's a bigger part of why Thailand has such a good reputation for healthcare. Now let's move things forward a bit. Imagine something more serious. You've been having ongoing discomfort. Tests have been done and suddenly you're looking at a procedure. Maybe something like a hip replacement or a heart-related issue. Now the conversation changes. You're no longer talking about a quick visit and a small bill. You're looking at hospital stays, specialist teams, and costs that run into hundreds of thousands of baht, sometimes more. And this is where preparation starts to matter. If you've got solid insurance, it's a very different experience. If you don't, or if your coverage is limited, that's when decisions can start to feel a bit heavier. And then there's the third scenario. The one most people don't really think about early on. Long-term conditions. Something ongoing. Something that doesn't just get treated and resolved. It might be cancer. It might be a neurological condition. It might be something that requires regular hospital visits, medication, monitoring over months, even years. And in that situation, it's not just about cost. It's about consistency. Managing appointments, dealing with insurance claims, keeping everything aligned with your visa requirements at the same time. Now, none of this is unusual. This is just life anywhere in the world. So let's shift over to visas, because this is the other side of the equation. And the good news is Thailand still very much welcomes retirees. That part hasn't changed. What has changed slowly over time is how structured the system has become. Not difficult, just more procedural. And once you understand the basic framework, it actually becomes quite manageable. Now, for most people watching this, there are really two main visa routes to be aware of: the non-immigrant O and the OA. They sound similar, and in some ways they are, but how you deal with them day to day can feel quite different. The OA visa is usually applied for from your home country. It tends to come with slightly stricter requirements, things like health insurance, and more detailed financial checks up front. The non-immigrant O visa is often the route people take if they're already in Thailand or planning to transition into retirement here. It's generally seen as a bit more flexible. Now, technically, you don't usually get a brand new visa issued inside Thailand, but many people switch to a non-immigrant O from within the country and then move on to a 1-year retirement extension. But whichever route you take, the core idea is the same. You need to show that you can support yourself financially, and for retirees, that usually comes down to one or two methods. When applying for a 1-year extension of stay, the first is the deposit method. This is where you keep 800,000 Thai baht in a Thai bank account. It needs to be there before your extension and maintained according to the rules which your local immigration office will guide you on. The second option is the income method. That's where you show a monthly income of at least 65,000 Thai baht, usually through pension payments or regular transfers into your Thai account. Both approaches work. Neither one is better, it just depends on how your finances are structured. If you've got a steady pension, the monthly route can feel very natural. If you prefer to keep things simple and already have savings, the lump sum can be easier. Now, alongside these, there are some newer visa options. You may have heard of the LTR visa, the long-term resident visa, which offers a longer stay period and fewer renewals. On paper, it looks very attractive, but in practice, it's aimed more at higher income individuals or people with substantial assets. So for many retirees, it doesn't quite fit. There's also the DTV visa, more geared towards remote workers and digital professionals. Again, useful in certain situations, but not really the core path for most people retiring here. So when you strip it all back, in 2026, the reality is quite simple. Most long-term retirees are still using some form of the non-O or the OA route, with annual extensions, financial proof, and a bit of paperwork along the way. And that's completely fine, because once you get into the rhythm of it, it becomes routine. But, and this is where things start to connect, visas don't exist in isolation. They link directly to your financial setup, and in some cases your healthcare as well. And that's the part that often catches people by surprise. Now, this is where things start to overlap a little bit, and where a lot of people get caught off guard. Because on the surface, visas and healthcare feel like two separate things. One is paperwork, the other is medical. But in reality, they can affect each other more than people expect. For example, depending on the type of visa you're on, particularly the OA or the OX, you may be required to show valid health insurance as part of your application or renewal. And that insurance usually needs to meet a minimum level of coverage. So far, that sounds reasonable. But here's where it gets interesting. Let's say you've been living here for a number of years. Everything has been ticking along nicely. Your visa renewals are routine. Your insurance is in place, no real issues. Then over time, your situation changes slightly. Maybe your insurance premium becomes much higher than you expected, or your provider decided not to renew beyond a certain age, or a new medical condition appears and suddenly parts of your coverage are limited or excluded. Now you're in a position where your healthcare situation has changed, but your visa may still depend on it. And that's the part most people don't fully think through at the beginning. Now, to be fair, this doesn't apply equally to every visa type. For many non-O retirement extensions done inside Thailand, the insurance requirement isn't always enforced in the same way, but the overall direction is quite clear. Thailand prefers retirees to have some form of medical coverage in place, which makes sense. It protects both you and the healthcare system. So, practically speaking, if your health situation shifts or insurance becomes difficult to maintain, your options can narrow a little bit. Not overnight, not dramatically, but gradually. And this is why flexibility becomes so important, because the system itself isn't rigid, but it does expect you to stay within certain boundaries. And if you understand how these two areas connect early on, you can make decisions that keep things simpler later, rather than having to react when something changes. And that's really the difference: planning ahead versus adjusting under pressure. And this leads us into what that actually looks like in real life, because this is where small changes can start to stack up. So let's look at how this can play out in real life. Not worst case scenarios, just normal situations that unfold over time. Imagine you've been living in Thailand for several years. Everything's been smooth, your visa renewals are routine, your day-to-day life is comfortable, and you've settled into a rhythm that works. Then gradually a few small things start to change. You're getting a bit older, your insurance premium ticks up again. Nothing dramatic, just noticeable. Then one year, your provider decides they won't renew policies beyond a certain age. So you start looking around for alternatives. But now you're applying at an older age, with a bit more medical history behind you. And suddenly your options are a bit more limited than they used to be. And at the same time, something else shifts. Maybe your embassy changes how income verification works, or stops issuing letters altogether, which has happened in some cases. So now you're adjusting how you prove your income for your visa as well. Individually, none of these things are a major problem, but they don't happen in isolation. They happen at the same time. And that's when you start to feel the system a bit more. Or take a slightly different situation. You need to travel back home for medical treatment, something that requires a few months away. While you're gone, your financial setup shifts slightly. Maybe your Thai bank balance drops below the required level without you realizing. You return ready to continue life as normal, and suddenly your next visa extension isn't quite as straightforward as it used to be. Again, not a disaster, but not something you want to be figuring out under pressure. And this is really the point. Living in Thailand long term isn't difficult, but it does reward people who stay a step ahead of those small changes. Because when everything is lined up, your finances, your healthcare, your paperwork, life here feels incredibly easy. But when a few things drift out of sync at the same time, that's when it can start to feel a bit more complicated than expected. And that's exactly why having a simple, practical strategy makes such a big difference. So what does a sensible approach actually look like in practice? Because by this point, you can probably see there isn't one perfect solution. But there is a way to make all of this feel simple and manageable. The first shift is just thinking of healthcare and visas as one system, not two separate things to deal with, but something that needs to work together over time. Once you look at it that way, your decisions become a lot clearer. If you're using private insurance, the key is sustainability. Not just what looks good this year, but what you can realistically maintain 5, 10, or even 15 years from now. A mid-level plan that you keep long term is often far more useful than a high-end policy that becomes too expensive later. If you're leaning more towards self-funding, then it's about structure. Having a dedicated pool of money set aside specifically for healthcare. separate from your day-to-day spending and separate from the funds you're using for your visa requirements. That way you're not mixing everything together and you always know where you stand. And then there's the administrative side. Thailand isn't difficult when it comes to paperwork, but it does expect you to be organised. Keep copies of your documents, your bank records, visa stamps, insurance details, all in one place makes life much easier when renewal time comes around. It sounds simple, but it saves a lot of stress. The other thing that helps more than people expect is building a bit of familiarity. Using the same hospital, getting to know how your local immigration office operates, understanding their process. Because once things feel familiar, they also feel predictable. And predictable is what you want. If at some point you'd rather not deal with the admin yourself, there are always visa agents who can handle renewals for you. It's not about cutting corners, it's just about deciding where you want to spend your time and energy. And finally, flexibility. This is probably the most underrated part of living here long term. Things don't tend to change dramatically in Thailand, but they do change gradually. Rules get adjusted, processes shift slightly, requirements evolve, and the people who enjoy living here the longest are usually the ones who stay relaxed about that. They keep an eye on things, they adapt when needed, and they don't fight the system. Because when you approach it that way, everything becomes much easier to manage, and more importantly, it stays that way over the long term. So when you step back and look at all of this, it really comes down to something quite simple. Healthcare in Thailand is excellent. Visas are manageable, but neither of them are something you can completely ignore long term. They just need a bit of attention. If you plan ahead, even just a little, everything becomes much easier. Your healthcare feels under control, your visa becomes routine, and you're not constantly reacting to things. You're just getting on with life. And that's really the goal, because when the practical side is handled properly, everything else about living in Thailand starts to shine. The slower pace, the day-to-day ease, the sense of space and freedom. All the reasons people come here in the first place. And those things don't fade over time. If anything, they get better. But they're much easier to enjoy when you know the foundations are solid. So if you're planning your move or already living here, just take a bit of time to think this through properly. Not in a complicated way, just in a realistic one. Because the people who make Thailand work long term aren't the ones who got lucky. They're the ones who prepared just enough and then relaxed into it. And once you reach that point, life here can be very, very good. If you enjoyed today's video, can you do me a massive favor and press the subscribe button? It'll really help the channel, and also press the like button. This really helps the channel and push to people like yourselves who want to retire over here in Thailand. Thanks for listening today, and I'll see you on the next one.